Welcome to RANsquawk morning briefing for 17th of September 2009. It's going through 10 o'clock then in London, a quick recap of the overnight news and where we stand so far in Europe. Starting off in the Asian session, in terms of equities, it was pretty much a continuation of the higher close in the US yesterday, predominantly led by the financials, and also good lift in basic materials and oil and gas after the dollar hit a one-year low in the index. That's the dollar index, prompting a lift in commodity prices. And also a WTI crude futures finishing high on the session, aiding some of those oil majors. So the Nikkei did finish up 1.7% in Japan. And also coming out of Japan, we saw the Bank of Japan upgrade its view of the economy and financial conditions, paving the way for a broader debate next month on whether to start phasing out its measures to support corporate funding. The Central Bank's Policy Board voted unanimously to keep rates on hold at 0.1%, which was as expected by the markets. A little reaction to that. The BOJ statement saying financial conditions remain severe but are increasingly showing signs of improvement. Also saw Shirakawa later in his press conference in the early hours of Europe. He did say that, again, he is somewhat in favour of a stronger yen, so pretty much in tandem with the comments that we saw from the government and the newly elected Finance Minister Fuji yesterday, and the yen again did strengthen slightly this morning on the back of those comments from the governor of the BOJ. Elsewhere as well, it did aid the Nikkei was Japanese manufacturing grew less pessimistic in September, with the Tankan survey showing an improvement. They said that their sentiment index rose 9 points to -33 in September from -42 in August. Elsewhere, on a global front, Bank of England's Postin has said that top industrialised nations, they need to coordinate in terms of coordinate closely and widely as possible their moves in regards to tapering off economic stimulus measures. That's pretty much been echoed this morning so far by the German and French finance ministers and also the Chancellor Merkel in Germany. In terms of US headlines, late yesterday, for anyone who did not stick around, the Fed said that nation's largest regional banks are being reviewed, but yet they're yet to decide whether a full stress test is to be run. The Fed Commercial Real Estate Review would cover US banks smaller than the initial 19 largest banks, which were, of course, stress tested a few months ago now. Elsewhere, White House's Volcker says there are signs of an early state of recovery, but it's still too early to resume business as usual. And also noting out of France, Lagarde did say this morning pre-market that 09 GDP forecast has been revised upwardly to -2 to -3% from a previous contraction of 3%. Elsewhere in equities, as mentioned, positive finish. Wall Street, Nikkei up 1.7, so UK and European bourses did open higher and are trading higher around 0.5% at the moment. Again, basic materials are the outperforming sector once again as the dollar index has hit another fresh low. And gold prices as well, we have topped out around $1,025 so far this morning, so getting very close to that all-time high in spot gold to keep a close eye on at 1,032, which was seen back in March of 2008. Elsewhere, on an individual basis, we have been seeing the rumour mill in full flow today. Rosalie saw a bid of around 2.5% in their share prices after rumours swelled that the FTSE company may be being approached by an Abu Dhabi fund in regards to state building within the company. Still remains unconfirmed, and their shares have drifted slightly lower, but it was in focus early on. As well as ArcelorMittal, one of the biggest stocks in the CAC, some market talk in regards to a possible capital increase there, but again unconfirmed. The firm themselves declined to comment on market talk, but they are still lower. They were also downgraded at SocGen today. Separately, Barclays, the company accused of trickery in that $12.3 billion toxic asset sale they announced yesterday. As according to the Telegraph, they've been accused of banking by sleight of hand after creating a new company to take over its most toxic assets and ring-fence future losses. And noting for Oracle, they reported after market yesterday X items Q1 2010 EPS 30 cents, which was in line. Sales though were slightly weaker at 5.1 billion. Most importantly, new license sales at the world's number 3 software maker fell 17%. Analysts, or the company themselves, said a steeper fall, or a fall of 4 to 14% decline was forecast just 3 months ago, so slightly worse there in terms of a fall in their new license sales. They are seeing lower in pre-market. As well, in US stocks, we'll be keeping an eye from the bellwether stock FedEx. They're due to report around 1:30 London time. So looking ahead then, we'll have the UK CPI industrial trends order number. That'll be due at 11 o'clock London time. Top of the hour, in terms of 12 o'clock afterwards, we'll see Canadian CPI numbers. 1 o'clock, we'll have the Swiss interest rate decision, analysts expecting rates to remain on the hold at 0.25%. 1:30 sees the US housing and building permits alongside the jobless data. 3 o'clock sees the Philly Fed survey, and then EI natural gas storage change. That'll be at 3:30. As well, in terms of fixed income specific, obviously bonds have been under quite a lot of pressure this morning. Just over 10 billion euros worth have been cleared now in terms of government auctions out of both Spain and France. The market will now look ahead to the US 2, 5 and 7 year note refunding announcement will be at 4 o'clock London, that's 10 in Chicago.